Hi, this is Jay Norris, author of Mastering the Currency Market and host of Live Market Exercise on Clovernest.com. Welcome to the report. Before we get to the charts, I do need to point out that Forex and futures trading involves substantial risk of loss and is not suitable for all investors. The charts we're looking at are real-time market snapshots and may not be replicated going forward. First market we're looking at is the Australian US dollar. Australian dollar retraced a little bit of yesterday's range. You got up towards the middle of that range or so and you were rejected. I think the fact that you have a lower low today and a lower high would lend credence to this downtrend you're in right now. Short-term trend definitely down on the daily. You're in a position to shift that short-term trend on the weekly tomorrow. I think it's telling that a serious market like this, a leading indicator market, a carry trade market like that, is down so much, and I think this gives us a big hint as to what could be coming as far as dollar strength overall. Next market, the Euro-US dollar. Influential market, sure. The Euro-US dollar, great trading vehicle, but is a leading indicator? I don't think so. But you had a good day nonetheless. You made a higher high. The move here, you're inching higher. Some traders are calling this a breakout. Breakout to where, I don't know. You've got real good resistance up ahead. So I think a lot of long-term technicians, at any rate, and even the pure fundamental players are looking forward to taking a shot at getting short up at this historic high, the 2010 high, I believe is 42.80 up there. And you see the confluence of your weekly trend line there also. So big resistance level just ahead. And as I was saying before, I would take the Aussie move a little bit more seriously. The Aussie down move more seriously than I take a Euro rally here. Next market, the pound dollar. I think this, I was telling my clients today in the live market exercise, this kind of smacks of distribution here. Big down day, big up day, big down day, big down move, I should say, up move. And all that back and forth, but you're not going anywhere. I don't necessarily see it as consolidation at this point. I think it could be distribution. When do we admit it's not? When you get a close above the monthly directional line there at 63 even or so. Until then, I'd have to think that this distribution following the peak here, following that big change direction candle there, right there, is overall bearish. So let's keep an eye on that. Let's take a look at the weekly chart also. Boy, that's one pretty good rising wedge there. Long-term rising wedge would generally be a bullish pattern. We'll have to see on the daily pattern. The daily chart, however, it looks like distribution to me. Pound, not the leading indicator market. It was. Again, I wouldn't take the up moves in the European currencies too seriously. I'd be more concerned about that down move in the Aussie. I think that's more telling as to what's going to be coming. Hey, let's look at the dollar CAD. Dollar CAD, you had a little bit of a pullback. Overall, it's holding its gains. You have an inside candle today. Overall, you have to think this move is pretty bullish. The daily's higher. It looks like you shifted the weekly, but you can't say that affirmatively till you close the week above that white line. So very interesting. Overall, though, the big pattern here, the big picture pattern is still one of lower lows and lower highs. So dollar CAD may not be able to get off the deck here, but I think tomorrow will go a long ways to see where which way that's going to lean coming into the spring here in the U.S. Next market, the Chief, and this is just a flat-out balloon, big bubble on the upside for the Swissy. I'll show you a futures chart here. Look at that! Wow. I mean, just ba-boom. Yesterday you had the huge up move here. Today you're just kind of sitting there. They're just blowing them all out of there. But there's no need to see the future. You can gauge the move here. I think probably time-wise now and price-wise, you're probably getting pretty close to an all-time low here. Well, technically you're at the all-time low. I think you're getting close to a bottom. I've been saying that for a while now, time-wise and price-wise, I thought too. But we couldn't anticipate that big spike down based on you having a flight to quality here for the European currencies. In the money's going into Switzerland, and that was all sparked by the terrible earthquake, and then now the nuclear complications in Japan. So the Swissie's still seen as a flight to quality. That's got to be killing the Swiss. So got to be killing Swissy international companies who are really hamstrung by all this. And obviously the Swiss central bank has wasted enough money trying to intervene, so they're just going to step back and let it go. I tell you what, though, just my nose here, what I smell, and I think you're very, very close to a big concerted effort to turn things around, and I think it'll be successful too. And the Swissy would be a prime target for that. Wicked waves in the waters right now, though, people. So I mean, you don't want to trade unless you're a professional, stone professional. Yen. Dollar yen. Here's the big one. It almost doesn't look like they're done with this thing yet. After today, you have a look at an intraday chart here, and they can't clamber back above that key 80 level. Here's my 4-hour chart. Here, I'll show you my 4-hour direction line, which is key to me. I key off this an awful lot. You guys, that my clients, and you guys that attend the exercise, live market exercise, you know how important I consider that 4-hour direction line, and the fact that you can't get above the 4-hour direction line is pretty telling. It's telling this market's weak. Hey, let's take a look at the U.S. stock market. All is not panicking today. You had somewhat of a recovery rally. Not much. Tomorrow is going to be a big, big day for sure. Friday's going to be a big day. All things considered, it doesn't look to me like this U.S. sell-off has been that bad at all. I don't even think you've retraced 25% of this rally here. Maybe just did get to 25% here. I'll turn the 25 on. Yeah, a little bit more than that. But you certainly didn't get at 382. And, it's still within the norm of a very normal correction for sure. So, and here would be your trend line, something like that. So, not a big deal. You go to a body-to-body trend line, you're still something like that. So, again, not that big of a deal, right? In the U.S. stock market, that's based on definitely the theory which I subscribe to, that the shallower the retracement, the stronger the overall move. Overall, this is pretty shallow retracement. So, no great shakes just yet. Hey, my name is Jay Norris. I have to remind you also of the contest. Win a $3,500 trading course at trading-u.com/blog. You look in the upper right of that blog page, and you'll have that advertisement to register for the contest. And I tell you what, I wish I had this trading course 10, 15 years ago for sure. We put a lot of work, a lot of experience went into that course, so I think that's well worth having on the bookshelf for you. Hey, thank you very much. My name is Jay Norris, and I'll see you back here on Saturday morning for the weekly wrap-up.